Most traders believe success comes from finding that perfect system. They spend months hunting for the holy grail strategy, the secret indicator combination, or the magic formula that never fails. They buy course after course, study chart pattern after chart pattern, convinced that somewhere out there exists the perfect blueprint for trading riches. But here's what nobody wants to tell you. Strategy isn't what separates winners from losers in this game. If you've been stuck in this exact cycle of strategy hunting, hit that like button right now and stick around, because what I'm about to reveal will completely change how you think about trading success. Right now, thousands of traders are using the exact same moving average crossover systems. Thousands more are trading identical breakout patterns. Yet somehow, 90% of them still lose money. How is that possible? If strategy was the answer, wouldn't everyone using profitable strategies be making money? The uncomfortable truth is this. The traders who succeed aren't using better strategies. They're doing something completely different that most people refuse to accept. What I'm about to reveal will challenge everything you think you know about trading success. By the end of this video, you'll understand why your favorite YouTube guru strategy hasn't made you rich, why that expensive course didn't transform your account, and most importantly, what actually determines whether you'll join the elite few who consistently profit from the markets or remain stuck in the endless cycle of hope and disappointment. Before we dive into this game-changing revelation, make sure you're subscribed and hit that notification bell, because this channel is dedicated to revealing the uncomfortable truths about trading that nobody else wants to talk about. Let me show you exactly how this lie has been destroying trading accounts for decades. Picture this scenario. Two traders sit down at their computers. Both have access to the same charts, the same news feeds, the same technical indicators. Trader 1 has spent years perfecting an algorithmic system. Every entry signal is mathematically precise. Every exit is calculated to the penny. The back tests show incredible results spanning over a decade of market data. Trader 2 uses something embarrassingly simple: basic support and resistance levels. Maybe a moving average or two, nothing fancy, no complex algorithms, no proprietary indicators, just the fundamentals that any beginner could learn in an afternoon. Now here's where it gets interesting. After 6 months of live trading, guess which trader has the profitable account? It's not who you think. Trader 1, despite having the superior strategy, has blown through multiple accounts. Meanwhile, Trader 2 is steadily growing their capital month after month. The difference isn't in what they're trading, it's in how they're trading it. This scenario plays out every single day in trading rooms around the world, yet most people never learn the lesson. Pause the video for a second and think about this. Which trader would you have bet on? Drop your answer in the comments below, and more importantly, tell me which trader you identify with more. The real problem isn't your strategy. It's something far more fundamental, far more challenging to fix, and far more important than any technical analysis you'll ever learn. Most traders approach the markets like they're solving a puzzle. They believe if they can just find the right combination of indicators, the right entry signals, the right market conditions, then profits will follow automatically. This mindset is exactly backwards. Trading isn't a puzzle to be solved. It's a game to be played. And like any game, success doesn't come from knowing the rules perfectly. It comes from executing those rules consistently under pressure. Think about professional poker players. They don't have access to better cards than amateur players. They don't know some secret about probability that others don't. What separates them is their ability to make the right decision every single hand, regardless of their emotions, regardless of previous wins or losses, regardless of the stakes involved. The same principle applies to trading, but with one crucial difference. In poker, you're playing against other people. In trading, you're playing against yourself. Every click of the mouse is a battle between logic and emotion. Every trade setup is a test of your ability to follow your plan when everything inside you wants to do something different. Your biggest enemy isn't the market. It's the voice in your head that whispers, maybe this time will be different. Here's what actually happens when most traders see their strategy in action. They start with the best intentions. They've backtested their system. They know their win rate, their average profit, their maximum drawdown. On paper, everything looks perfect. Then reality hits. The first few trades go against them. Not because the strategy is flawed, but because that's how probability works. Even a 70% win rate system will lose 3 trades in a row regularly. But when those losses start piling up, something changes in the trader's mind. Doubt creeps in. They start questioning every signal. They begin second-guessing entries that perfectly match their criteria. They hold on to losing trades longer than their rules allow, hoping for a miracle reversal. They cut winning trades short because they're terrified of giving back profits. Within weeks, they're no longer following their strategy at all. They're improvising, gambling, hoping. This is where the strategy lie becomes most obvious. The system didn't fail. The trader failed to execute the system. But instead of acknowledging this uncomfortable truth, most traders blame the strategy. They convince themselves they need something better, something more sophisticated, something that wins more often. So they start the cycle all over again. New course, new mentor, new indicators, same results. The traders who actually make money have learned something that courses don't teach. They understand that having a profitable strategy is only 10% of the equation. The other 90% is psychological. It's about controlling fear when trades go against you. It's about managing greed when trades go in your favor. It's about maintaining consistency when your emotions are screaming at you to break your rules. Professional traders don't win because they predict market movements better than everyone else. They win because they've mastered the art of self-control. They've trained themselves to act according to their plan regardless of how they feel in the moment. When fear tells them to exit early, they stay. When greed tells them to risk more, they stick to their position sizing. When frustration tells them to take revenge trades, they walk away. This level of self-mastery doesn't happen overnight. It's developed through hundreds of trades, through multiple losing streaks, through the painful process of watching profits evaporate and learning to stay calm anyway. Most traders never reach this point because they're too busy chasing the next shiny strategy to focus on the real work. The market doesn't care about your technical analysis. It doesn't care about your trend lines, your Fibonacci levels, or your custom indicators. What the market does care about is consistency. It rewards traders who show up every day with the same approach, the same risk management, the same emotional control. It punishes those who are constantly changing their minds, adjusting their rules, and letting emotions drive their decisions. Think about the most successful businesses in the world. McDonald's doesn't succeed because they have the best burger recipe. They succeed because they execute the same process consistently in thousands of locations worldwide. Amazon doesn't dominate because they invented online shopping. They dominate because they perfected the execution of their business model. The same principle applies to trading, but most people are too focused on finding the perfect recipe to master the execution. This is why you can give the same profitable strategy to 10 different traders and get 10 completely different results. The strategy remains constant, but the execution varies wildly based on each trader's psychology, discipline, and emotional control. The traders who understand this focus their energy on developing these skills rather than endlessly searching for better setups. So, if strategy isn't the answer, what is? What's the real secret that separates consistent winners from perpetual losers? The answer lies in a concept that most traders completely overlook. Something so fundamental that once you understand it, everything else about trading success becomes crystal clear. But that revelation requires us to dig deeper into the psychology of what really drives profitable trading decisions. The answer is discipline. Not the kind of discipline your high school teacher talked about, but something far more profound and infinitely more challenging. It's the ability to do what your plan says when every instinct in your body screams to do the opposite. It's following your rules when you're down 3 trades in a row and your confidence is shattered. It's sticking to your position sizing when you've just had your best week ever and feel invincible. Most people think discipline means willpower. They imagine it's about gritting your teeth and forcing yourself to follow rules. But that's not discipline at all. That's torture. Real discipline feels effortless because it becomes part of who you are, not something you have to constantly fight for. The traders who master this don't struggle with their rules. They've internalized them so completely that breaking them would feel wrong. Here's where it gets interesting. You can actually measure a trader's level of discipline by looking at one simple thing. Not their win rate, not their profit factor, not their strategy complexity. Look at how closely their live results match their back-tested results. Undisciplined traders will show massive deviations. Their live trading looks nothing like their system testing because they can't help but interfere with the process. Disciplined traders show remarkable consistency between their backtests and live results. Why? Because they execute their system exactly as designed, without modification, without second guessing, without emotional interference. They treat each trade like a business transaction, not a personal validation of their intelligence or worth. The path to developing this kind of discipline starts with a brutal truth. You must accept that you will be wrong frequently. Not sometimes, not occasionally, frequently. Even the best trading systems are wrong 40 to 50% of the time. Your job isn't to be right. Your job is to follow your process and let probability work in your favor over hundreds of trades. This acceptance changes everything about how you approach the markets. Instead of desperately trying to predict what will happen next, you focus on responding correctly to whatever does happen. Instead of hoping for certainty, you embrace uncertainty and learn to profit from it. Instead of fighting the market, you dance with it. But here's what nobody tells you about building discipline. It's not about being perfect from day one. It's about being slightly better than you were yesterday. Every time you follow your rules when it's difficult, you're building discipline muscle. Every time you resist the urge to overtrade, you're getting stronger. Every time you take your stop loss without hesitation, you're proving to yourself that you can control your actions regardless of your emotions. The compound effect of these small disciplined actions is staggering. A trader who follows their rules 90% of the time will dramatically outperform a trader who follows them 70% of the time, even if they're using identical strategies. That 20% difference in execution creates a massive difference in results over time. This is why successful traders keep detailed journals. Not because they love paperwork, but because documentation forces accountability. When you have to write down why you entered a trade, what your plan was, and whether you followed it, you can't lie to yourself about your execution. The journal becomes a mirror that shows you exactly where your discipline breaks down. Most traders discover they have specific patterns of indiscipline. Maybe they always cut winners too early on Friday afternoons. Maybe they consistently risk too much after big wins. Maybe they freeze up during high volatility periods. Once you identify these patterns, you can build specific rules and safeguards to address them. The market is constantly testing your discipline in subtle ways. It might give you 3 winners in a row just to see if you'll get cocky and increase your risk. It might give you 5 losers in a row just to see if you'll abandon your system. It might create the perfect setup right after you've decided to stop trading for the day, testing whether you'll stick to your schedule. These aren't coincidences. They're the natural rhythm of markets, and they separate disciplined traders from everyone else. Think about professional athletes. They don't win because they have secret techniques that amateurs don't know. They win because they execute the fundamentals flawlessly under pressure. A professional tennis player doesn't have a magic serve that recreational players can't learn. They have the discipline to hit that serve the same way every single time, regardless of the score, regardless of the crowd, regardless of their emotions. Trading demands the same level of disciplined execution. Your entry signal needs to work the same way whether you're up for the month or down. Your risk management needs to function identically, whether you're feeling confident or scared. Your exit strategy needs to operate without regard to your hopes or fears about what might happen next. The beautiful thing about discipline is that it's completely within your control. You can't control market direction, you can't control news events, you can't control volatility, but you can control your response to all of these factors. When you truly understand this, you stop feeling like a victim of market forces and start feeling like the captain of your own ship. However, building this level of discipline requires something most traders aren't willing to do. You have to start small and stay small until you prove you can handle it. Most people want to trade large positions immediately because small profits feel insignificant. But small profits from disciplined trading are infinitely more valuable than large losses from undisciplined gambling. Every successful trader went through a period where they focused entirely on execution rather than profits. They measured success by how well they followed their rules, not by how much money they made. This might sound backwards, but it's the only way to build the psychological foundation for long-term success. Once you can trade a small account with perfect discipline, scaling up becomes relatively straightforward. Here's a challenge for you. Think about the last trade you took. Did you follow your rules perfectly, or did emotions influence your decisions? Be honest in the comments below. And if this video is helping you see trading differently, share it with another trader who needs to hear this message. The market has a way of humbling traders who try to skip this step. They might get lucky with large positions for a while, but eventually their lack of discipline catches up with them. The account gets wiped out, confidence gets shattered, and they're back to square one. But this time, they have to overcome not just their original challenges, but also the emotional scars from their previous failure. This is why the most successful traders often have stories of multiple account blowups early in their careers. Each failure taught them something about discipline that couldn't be learned any other way. The pain of losing money due to poor execution is what finally motivates most traders to develop real self-control. It's an expensive education, but it's often the only one that sticks. The transformation from strategy-focused to discipline-focused thinking doesn't happen overnight. It usually occurs after a trader has tried everything else and finally realizes that the problem isn't their system. It's a humbling realization, but also a liberating one. Once you stop looking for external solutions and start working on internal mastery, real progress becomes possible. What happens next is where most traders make their biggest mistake. They think discipline is some kind of switch they can flip on and off. They believe that once they understand the importance of self-control, they'll automatically have it. This couldn't be further from the truth. Discipline is like a muscle that needs to be trained, strengthened, and maintained through deliberate practice. The process starts with something most traders find uncomfortable. You have to become obsessed with the process instead of the outcome. Every morning, instead of checking how much money you made or lost yesterday, you ask yourself a different question. Did I follow my rules perfectly? This shift in focus might seem minor, but it changes everything about how you approach trading. When you measure success by execution rather than profit, something magical happens. You start celebrating losses that were taken according to plan. You feel proud when you resist the urge to overtrade during slow market periods. You gain confidence not from being right, but from being consistent. This psychological shift is what separates traders who last from those who burn out. But here's where it gets really interesting. The market seems to sense when traders make this transition. It's almost like the charts know when someone stops desperately chasing profits and starts focusing on process. Suddenly, opportunities become clearer. Setups that used to feel confusing start making sense. Risk management that once felt restrictive becomes liberating. This isn't mystical thinking, it's simple psychology. When you're not emotionally attached to every tick of price movement, you can see patterns more objectively. When you're not stressed about making money, you make better decisions. When you're not afraid of being wrong, you can cut losses quickly and let winners run. The market rewards this calm, professional approach. Most traders never reach this point because they get trapped in what I call the strategy carousel. They jump from system to system, always looking for something better, never giving any single approach enough time to work. They'll use a breakout system for 2 weeks, hit a losing streak, then switch to a mean reversion approach. When that doesn't immediately work, they try scalping, then swing trading, then options, then futures. This constant switching creates a vicious cycle. They never develop the muscle memory needed to execute any system properly. They never learn to recognize the subtle market conditions where their approach works best. Most importantly, they never build the confidence that comes from sticking with something long enough to see it succeed. The traders who break free from this cycle do something that feels counterintuitive. They pick one simple approach and commit to it for at least 6 months, regardless of short-term results. During this period, they focus entirely on execution. They track every deviation from their rules. They analyze every emotional reaction. They treat each trade like a data point in a larger experiment. What they discover is shocking. The strategy they thought was mediocre becomes highly profitable once they execute it consistently. The system they were ready to abandon starts producing steady returns. The approach they considered too simple begins generating better results than all the complex systems they tried before. This revelation usually comes with a mixture of excitement and frustration. Excitement because they finally found something that works. Frustration because they realize how much time and money they wasted chasing complexity. But this frustration is actually valuable. It's what motivates them to never again confuse activity with progress. The next phase of development involves what professional traders call unconscious competence. This is when following your rules becomes so automatic that you don't have to think about it. Your brain processes market information and executes trades according to your system without conscious effort. You've internalized the process so completely that discipline feels effortless. Reaching this level requires thousands of repetitions. Just like a professional musician doesn't think about finger placement while playing, a disciplined trader doesn't struggle with rule following while trading. The decision-making process becomes fluid, natural, almost instinctive. But unlike instinct, this competence is built on solid foundations of tested rules and proven processes. The contrast between disciplined and undisciplined trading becomes stark once you understand this concept. Undisciplined traders are constantly fighting themselves. Every trade is a battle between what they should do and what they want to do. Every decision requires willpower. Every rule feels like a restriction. This internal conflict is exhausting and ultimately unsustainable. Disciplined traders experience the opposite. Following their rules feels natural because those rules have become part of their identity. Breaking the rules would feel wrong, like trying to write with their non-dominant hand. The system isn't something external they have to remember. It's something internal they simply express through their trading actions. This transformation doesn't happen in isolation. It requires what many successful traders call environmental design. You have to structure your trading setup in a way that makes discipline easier and indiscipline harder. This might mean removing certain indicators from your charts so you can't second guess your signals. It might mean setting automatic position sizes so you can't overtrade. It might mean trading only during specific hours so you can't get caught up in random market noise. Think of it like organizing your kitchen for healthy eating. If you want to eat more fruits and vegetables, you put them at eye level in the refrigerator. If you want to avoid junk food, you don't keep it in the house. The same principle applies to trading. If you want to follow your rules consistently, you design your environment to make rule following the path of least resistance. Professional traders also understand something about losing streaks that amateurs miss completely. Losing streaks aren't random punishments from the market. They're stress tests that reveal weaknesses in your psychological framework. Every extended period of losses is an opportunity to strengthen your discipline muscle and prove to yourself that you can stick to your plan regardless of short-term results. The traders who emerge from losing streaks stronger are the ones who maintain their process throughout the drawdown. They don't change their strategy. They don't increase their risk to make back losses faster. They don't take trades outside their system. They simply continue executing their plan with the same precision they used during winning periods. This consistency through adversity is what builds unshakable confidence. But here's what most people don't understand about confidence in trading. It's not about believing you'll win every trade. It's about believing you can handle whatever the market throws at you. Confident traders aren't cocky about their predictions. They're calm about their preparations. They know that regardless of what happens next, they have a plan for dealing with it. This type of confidence comes from what psychologists call mastery orientation rather than performance orientation. Performance-oriented traders measure themselves against external benchmarks. They compare their returns to market indices to other traders to their own expectations. This creates constant pressure and anxiety because so much is outside their control. Mastery-oriented traders focus on improving their execution, refining their process, and developing their skills. They measure progress by how consistently they follow their rules, how quickly they adapt to changing market conditions, and how effectively they manage their emotions. This internal focus creates sustainable motivation because everything they're measuring is within their control. The market seems to reward this mastery orientation in ways that feel almost supernatural. Traders who stop trying to beat the market and start trying to master themselves often see dramatic improvements in their results. Not because they've found a better strategy, but because they've become better at executing whatever strategy they're using. This is the real secret that separates winners from losers in trading. It's not about having access to better information, more sophisticated tools, or secret strategies. It's about developing the psychological skills to execute any reasonable approach with machine-like consistency. Once you have this capability, the specific strategy becomes almost irrelevant. You can take any profitable system and turn it into a money-making machine through disciplined execution. The irony is that most traders spend 90% of their time looking for better strategies and 10% developing better execution skills. Successful traders flip this ratio. They spend 90% of their time working on psychology, discipline, and emotional control, and only 10% looking for new trading approaches. This focus on internal development rather than external solutions is what creates lasting success in the markets. Understanding this principle changes everything about how you approach trading education. Instead of collecting more strategies, you focus on mastering the ones you have. Instead of looking for complex systems, you perfect simple ones. Instead of trying to predict market movements, you concentrate on controlling your responses to whatever movements occur. The path forward becomes clear once you accept this reality. Success in trading isn't about finding the holy grail strategy. It's about becoming the kind of person who can execute any strategy with unwavering discipline. This transformation from strategy seeker to discipline builder is where real trading success begins. But achieving this transformation requires understanding something even deeper about the nature of profitable trading that most people never discover. What I'm about to share with you represents the deepest level of trading psychology that most educators never touch. It's the difference between traders who struggle for years and those who seem to crack the code almost effortlessly. This isn't about willpower or motivation. It's about rewiring your relationship with uncertainty itself. The average trader approaches each position like it's a life or death decision. Their heart rate spikes when they click buy or sell. They watch every candle like it's determining their future. They celebrate wins like lottery victories and mourn losses like personal failures. This emotional intensity might feel normal, but it's actually the biggest barrier to consistent profits. Professional traders experience something completely different. They feel the same level of emotional involvement in their 100th trade as they do in their first trade of the day. Which is to say, almost nothing at all. Not because they don't care about money, but because they understand something profound about probability that most people never grasp. Every single trade you take is meaningless. Read that again. Your next trade, by itself, means absolutely nothing. It's not going to make you rich. It's not going to prove you're smart. It's not going to validate your analysis or confirm your predictions. It's simply one data point in a series of hundreds or thousands of data points that will eventually reveal whether your approach has an edge. This concept destroys most traders mentally because it goes against everything they believe about success. They want each trade to matter. They want to feel the thrill of being right. They want immediate feedback on their intelligence and skill. But markets don't work that way. Markets reward those who can detach from individual outcomes and focus on long-term statistical edges. Think about a casino owner watching the roulette wheel. Do they get excited when the ball lands on red? Do they panic when someone wins big at blackjack? Of course not. They know that individual spins and hands are irrelevant. What matters is the mathematical edge built into every game. Over thousands of plays, that edge produces predictable profits regardless of short-term fluctuations. Successful traders think exactly like casino owners. They know their system has an edge because they've tested it thoroughly. They know that edge will produce profits over time if they execute it consistently. Individual trades are just spins of the wheel. Some will win, some will lose, but the overall outcome is determined by mathematics, not luck. This mindset shift eliminates most of the psychological problems that destroy trading accounts. Fear disappears because no single trade can hurt you significantly. Greed becomes irrelevant because you're not trying to maximize individual trades. Hope and prayer have no place because you accept whatever outcome occurs. Revenge trading becomes impossible because there's nothing to get revenge for. But developing this probability mindset requires confronting something most people find terrifying. You have to accept that you don't know what will happen next. Not a sort of accept it, not intellectually acknowledge it. Truly, deeply accept that the next candle, the next news event, the next market move is completely unpredictable. This acceptance feels like giving up control, but it's actually where real control begins. When you stop trying to predict outcomes, you can focus entirely on managing risk and executing process. When you stop needing to be right, you can cut losses quickly and let winners run. When you stop hoping for specific results, you can respond objectively to whatever results occur. This is the mental framework that allows small accounts to grow into large ones over time. The transition to probability thinking usually happens after a trader experiences what I call the revelation trade. This is typically a loss that occurs despite perfect technical analysis, ideal market conditions, and flawless execution. The setup looked textbook. The entry was precise, the risk management was perfect, and the trade still failed spectacularly. Most traders respond to this experience with frustration and confusion. They review their charts obsessively, looking for what they missed. They question their strategy, their indicators, their entire approach. But some traders have a different response. They realize that this is exactly what probability looks like in real time. Even perfect setups fail sometimes, and that's not a bug in the system, it's a feature. This revelation liberates them from the impossible burden of trying to predict market movements. They stop looking for certainty and start looking for edges. They stop trying to be right and start trying to be consistent. They stop measuring success by individual trades and start measuring it by monthly and quarterly performance. This shift changes everything. The markets begin testing this new mindset immediately. It's almost as if the charts know when someone has made this mental transition. Suddenly, losing streaks appear just when you've decided that individual trades don't matter. Drawdowns occur right after you've committed to focusing on process over profits. The market seems determined to see if you really mean what you think. This testing phase separates the truly converted from those who are just intellectually playing with probability concepts. Traders who have genuinely embraced uncertainty remain calm during these tests. They continue following their rules because the rules aren't dependent on short-term results. They maintain their risk management because protection isn't negotiable. They stick to their process because the process is what creates the edge. Those who haven't fully internalized the probability mindset crack under pressure. They start modifying their approach during losing streaks. They increase position sizes to make back losses faster. They abandon their system in search of something that wins more consistently. They prove to themselves in the market that they still believe individual trades matter more than long-term statistical outcomes. So here's the brutal truth that no course will teach you and no mentor will admit. The strategy you're using right now is probably fine. That breakout system you abandoned last month could have made you money. That moving average crossover you dismissed as too simple might be exactly what you need. The problem was never the strategy. The problem is that you've been playing a psychological game with technical rules, and until you flip that equation, you'll keep getting the same disappointing results. Stop chasing the perfect system. Start building the perfect mindset. Stop looking for better indicators. Start developing better discipline. Stop trying to predict what the market will do next. Start controlling what you do next. The traders who make real money aren't the ones with secret strategies. They're the ones who can execute any strategy without letting emotion sabotage the process. Your trading success isn't waiting for you in the next course or the next guru's secret method. It's waiting for you in the mirror. The moment you stop fighting the market and start mastering yourself is the moment everything changes. That's not just trading advice. That's the only advice that actually matters. Look, if this video has opened your eyes to what's really been holding you back, I need you to do 3 things right now. First, smash that like button because this message needs to reach every trader who's been stuck in the strategy chasing trap. Second, subscribe and hit the notification bell because I'm committed to sharing more uncomfortable truths about trading psychology that you won't hear anywhere else. Third, drop a comment below and tell me, what's one trading rule you've been breaking consistently? Be honest. This community is about real transformation, not fake success stories. And if you're serious about developing the psychological edge that separates winners from losers, check out this video linked on the screen to build unshakable trading discipline. It's the perfect next step on your journey from strategy chaser to disciplined trader. Remember, trading success isn't about finding the perfect system. It's about becoming the perfect executor of any reasonable system. Until next time, focus on the person in the mirror, not the patterns on the chart.